Wall Street is selling quite quickly here today, folks, and something has spooked them pretty bad. And I want to take you through in this video kind of what's going on here. I think you guys have seen the moves, right? Tesla down about 5% here today. Nvidia has been down about 5%. Shopify down 4 to 5% today. Snowflake getting hit. AMD getting hit. Meta getting hit. Many of the stocks that have been doing well in this market are getting, let's just call it, kind of slammed today for the most part. A lot of 4 and 5% moves out there, right? And Wall Street all of a sudden is dumping these stocks when they had obviously been buying these stocks very heavy, okay? So I want to take you through kind of what's going on here, my perspective on this, what I'm up to this week. Over this next 48 to 72 hours specifically, am I buying over the next 48 hours, 72 hours? Am I staying back? Kind of what's my perspective on that, okay? Also going to share with you what's going on here with Wall Street because something has spooked them, and I want to show you what these things are that have spooked them now at this point in time that's making them say, you know what, we got to sell before some earnings come out here and before the Fed kind of makes their decision, okay? So I hope you guys enjoyed today's video. As always, I appreciate every single person that has subscribed to this channel, and let's get straight into this, okay? Look at this right off the bat. They're even selling their favorite stocks, okay? If you want to know Wall Street's favorite stocks right now in the market, they're these babies right here, okay? Oil and gas stocks. And even these, they're dumping out of these babies today. You know, something's had to spook these folks to make them even sell oil and gas stocks. Like, holy smokers, that's no joke. Chinese stocks have been hot. I don't know if you guys have been keeping track of many of these Chinese stocks, but many Chinese stocks, including Pinduoduo, which I don't have on my Chinese stocks watch list. I should add that probably. But this Pinduoduo company was up like 300+% just in a snap of fingers, essentially, okay? And so a lot of these Chinese stocks have been total risk on. Wall Street's been buying it up left and right. And here today, what do they say? They say, we want no pieces of those Chinese stocks. It's definitely not retail selling today because I look at some more retail-related stocks that even I personally own, and these stocks are actually green today. Oatly, Honest, a Chef, stocks like that, right? No downward moves there. So it's definitely Wall Street. You know, retail had their time to sell from really like November of 21 through about November of 22. That was retail just left, obviously, the market in mass and just dumped out of countless stocks, right? Now look at this. This is important because the VIX is finally spiking, which goes to show you there's definitely fear creeping in the market. Every time the VIX spikes big, you know fear is creeping in this market. And the VIX today is up over 8%, okay? That definitely shows you that Wall Street's kind of getting a little wary here and kind of like, okay, we're a little concerned about what's about to happen. You might be wondering, what in the world is going on here? Why is all of a sudden Wall Street dumping out all these stocks? Okay, let me take you through some very important things here, okay? First up here, Apple's expected to post its first revenue decline since 2019 on Thursday, right? And so Apple's coming out with these earnings, right? And this is the most significant thing for the market this week, which is saying a lot because there's so much that's about to happen over this next 72 hours. It's ridiculous, okay? But nonetheless, Apple's expected to report their first revenue decline since 2019. That's a big thing. But here's the issue, okay? And I think Wall Street's finally realizing this. As a father of 3 and the breadwinner of my family, I understand the pressure of what happens if something happened to me. How would my family be affected? Many of you watching this video right now are the breadwinners of your family. What happens if something happened to you? How would that affect your loved ones? Who would support your family in a situation like that? How would they be supported? This is where life insurance comes in hand, and our sponsor for today's video, which is Fabric by Gerber Life. With Fabric, you can help protect your family's financial future in case of any unforeseen circumstances. Life insurance used to be complicated. You'd have to find an agent, take time off from work for long appointments, and the whole process was just really time-consuming and daunting. But Fabric makes it easy and transparent for you to get a quote on term life insurance in less than 10 minutes. Fabric makes getting a quality term life insurance policy quick, easy, and super affordable. Their new lower price points mean significant savings over other providers. They offer high-quality policies like $1 million in coverage for less than $1 a day. And if you are not fully satisfied, you can get a 30-day money-back guarantee and cancel at any time. Protect your family today with Fabric by Gerber Life. Apply today in just 10 minutes at meetfabric.com/holysmokers. That's meetfabric.com/holysmokers. Wall Street only has them, as far as their analyst community, at about 1.9% down revenues for this past quarter, and they actually have them growing revenue for the March quarter, okay? Now, Do we think that's realistic? And I think that's a real question Wall Street's asking themselves right now. They're right. Wall Street's expecting them to have EPS basically in line with what they did in the same quarter last year. Is that realistic, right? And so I think these are fair questions that Wall Street's having to ask themselves about the most important company like Apple. And I'll show you like how impactful this is to the overall indexes here in just a moment. But I think they're starting to look at this and they're like, geez, man, is Apple really going to be able to sell just as many iPhones as they did in the same quarter last year? Because that's basically what they need to do to hit this sort of revenue number. We know there's a high probability that Mac business could be down in this coming quarter. We know there's a high probability iPad revenue could be down for this coming quarter. We know services is usually going to have at least a little bit of growth, but services, unfortunately, that growth has slowed down epically recently, like to some like the lowest growth we've ever seen by far and away for the services revenue. So in order for Apple to really push these numbers, Apple needs, in the biggest way possible, they need iPhone revenue to come through. And if iPhone revenue doesn't come through, Apple's in a very, very tough position, right? And so, nonetheless, folks, this matters in a significant way, because imagine Apple misses on this past quarter, and imagine if this upcoming quarter they say something like, we're expecting revenue to be down, let's call it 4 to 7% next quarter. Oh my gosh, then you have to change your entire yearly numbers. You have to change all your projections for the company. You have to change your EPS numbers in an epic way. That would be a huge, also that gives more worries about, S&P 500 earnings missing for the year, which adds more to the recessionary theme. That's a situation that would be in complete disaster. And I don't think it's impossible to imagine. It doesn't mean it's going to happen, but it's not impossible to imagine it. And it's something you have to consider as an investor out there, right? And I think that's something Wall Street's starting to be like, okay, we're taking a little bit of a risk going into this situation, right? You look at the weighting of the S&P 500. I don't know if you guys have ever seen something like this before, but it's important. Just understand how the market's weighted. It's not like all 500 stocks have an equal weight. No, okay? A stock like Apple has a 6.4% of the weight of the S&P 500. Basically, the simplest way to put that is if Apple goes down in a significant way, it's likely pulling down the entire S&P 500, okay? But that's not the biggest deal. This next one is the biggest deal, okay? As far as Apple and the NASDAQ 100, they have about 12% of the weight of the NASDAQ 100. So if you're talking about you're going to tank Apple stock, let's say the numbers aren't quite there, they report some really troubling guidance, something like that, right, for this next quarter, next year, whatever it is, right? Let's say Tim Cook doesn't sound very bullish on that conference call. You're in a situation there that you're going to push down the S&P 500, you're going to push down the NASDAQ, you're going to push down semiconductor stocks in general, and the other big tech stocks, right? And you're going to add more fuel to the fire of the recessionary theme. One of the other big reasons the stock market didn't go into a huge recessionary theme is Apple's numbers held up very well in 2022, like very well. I mean, every quarter was like, this has to be the quarter, and like they held up. And at some point in time, you're like, something's got to break here, right? And it kind of feels like something eventually is going to break here with Apple. And so Wall Street's kind of waking up to this a little bit, and they're kind of like, okay, we're setting ourselves up for a pretty significant risk here, okay? Next up here, the Federal Reserve obviously is likely going to hike interest rates, right? No, there's a lot of issues with this, right? Obviously, it's going to make, in terms of borrowing, more expensive. But there's a lot of issues with this that are bigger than that, way bigger than that, okay? The first one is almost everybody on Wall Street expects this to be a 25 basis point hike for the Fed. What if it's not? What if it's 50 basis points? We don't know. Like the market has been rallying into this. Financial conditions have been easing. Maybe the Fed doesn't like that. Maybe the Fed just wants to, it would be shocking if they moved 50 basis points because like last data I looked at, like 95% of Wall Street participants are expecting 25 basis points. But what if it happens, okay? That's significant. Next component of this is Jerome Powell. I don't think he's too happy going into this meeting. I don't think folks at the Fed are too happy going into this meeting, okay? They're not supposed to look at the market too much, okay? Not too much. But at the end of the day, these folks have to be looking at the stock market so far this year and absolutely hating it and saying, what are you guys doing on Wall Street? You guys are buying these stocks left and right. You're pumping tens of billions, hundreds of billions of dollars into many of these stocks, right? Causing their prices to go up, causing financial conditions to ease, and we're not done yet. It's not the time yet, okay? And I even look at somebody like myself, right? And I was doing the calculations on Friday, and I estimate my net worth has somewhat increased, like anywhere between like $500,000 and like $750,000 just in the past like 3 or 4 weeks. The Fed doesn't want that. The Fed doesn't want me to be richer right now. It doesn't want anybody to be richer. It wants all us to be poor right now, okay? Because the way they view this is if we all have a bunch more money, if we're all feeling more confident, right? We're more likely to go spend money out there in the economy. It's just a fact, right? We might go buy another real estate investment property, which they do not want that right now. We might go buy some new furniture, which they don't want that right now. We might go buy some new iPhones, which they don't want that right now, or a new car, which they don't want that right now. They're in their stance. We can go buy stuff. We can go feel rich 6 months from now, a year from now, 18 months from now. Not right now. And so Jerome Powell and the Fed, they have to be upset. And that is putting it lightly, okay? Upset. There's no way those folks are watching all this play out and saying, like, oh, this is good. Good. Everybody make money again. No way. They absolutely, I can tell you, despise what's going on right now, okay? The dragon is not slayed right now, right? Obviously, inflation's coming down, and that's good. But the thing is, we're so far from where the Fed wants to see us, right? We know the Fed's not even really going to consider, let's call it cutting rates until we're something in the twos, right? And so the Fed's looking at this situation like, let's slay the dragon first. And then if you guys want to buy up stocks, you want to buy up Bitcoin, you want to, make a bunch of money, you want to be rich again, you can do it then. But not right now. Now's not the time. We're still looking at CPI. Last data came in at 6.5. 6.5 is a long way from 2, which is where they want to be, right? In the 2s. So this is a situation where the Fed's not happy, and it's because the market's been rallying so much, it puts it into I would just say a higher probability. It doesn't mean it's the highest probability. We're still likely going to get a 25 basis point move, but it puts it into a higher probability that you could get 50 basis points. And that's when the market absolutely freaks out, right? The dragon is not slayed yet. It's hurt. It's being injured. That's good. But the bottom line is we have not beat this thing yet, okay? And so the Fed understands, like, we got to keep at this thing and don't go all risk on right now. Like, it's not quite the time yet, okay? That's the way the Fed looks at this, right? Now, next component up, you have certain things going on with certain stocks that are affecting the market very negatively, right? Wall Street is worried about chip makers, one in particular following Intel's disaster. What chip maker is this that Wall Street's all of a sudden worried about? Well, I'll show you the stock they're worried about. AMD. AMD reports earnings here in the next 24 hours. And everybody is very scared about AMD now at this point in time because Intel reported disaster. And I'll show you how bad of a disaster in just a moment. It was, yes, the worst, okay? But I think Wall Street's starting to look at this, right? And this is partially Xilinx as far as their growth. Believe me, if it wasn't for Xilinx, AMD's numbers would be awful right now, like complete awful, shrinking of revenues. But Xilinx is helping out the business in a substantial way for their 2022 numbers. Problem is they lap year over year in 2023 as far as those Xilinx numbers now. So folks are looking at this and saying, is this realistic? Especially after you saw Intel's numbers. Basically, analysts have EPS going up for the company in 2023. Is that realistic? I don't know, man. I don't know. I think it's shaky. Okay? I don't think that's in the bag whatsoever. As far as revenue goes, they have revenue going up 5% plus for the company in 2023. And that's with the Xilinx numbers lapped, right? And you think about this, right? What if the March quarter comes in at a down 10% number, a 15% number, which is not out of the realm of possibility whatsoever, right? We're not even going to talk about 20% number, but what if revenue's down 10 or 15%? That's a possibility. If that's a possibility, then you're looking at likely the full year numbers being flat or potentially revenue being down for the year, right? Because that likely means also the June quarter is in a situation where likely revenue is down pretty substantially as well, right? And then you're banking on the back half of this year to be great, but, I don't know if that happens. I mean, we've seen a lot of these companies promise these great back half of the year numbers, and they didn't come through, right? And then a lot of companies said, oh, things will be fixed in the first half of 2023. And now we're starting to see, oh, boy, a lot of these companies aren't quite having it in the first half of 2023, right? So the Wall Street's going to start believing, not believing anything. They're going to start saying, okay, you guys are saying it's supposed to be better later. Who's to say that's accurate, right? And so that's a situation we have now. And obviously AMD is not in Intel whatsoever. night and day better company, better run company, but at the end of the day, you can get some insights for NVIDIA and AMD by looking at Intel's numbers. And these numbers were awful, guys. I mean, I don't know if you guys saw these numbers. Intel reported fourth quarter revenue down 32% year over year. It wasn't like last year's fourth quarter was amazing for the company either, right? Fourth quarter revenue down 32% and 28% year over year on a non-GAAP basis. Full year revenue was down 20% year over year. So which means their business is getting worse more recently than it was over this past year. Their business over the past year is bad, but it's getting worse, okay? That's extremely troubling. Fourth quarter earnings, there were no earnings. They lost money. A company like Intel, you shouldn't expect them to lose money. It's Intel. Like, they're supposed to be this great dividend payer that's supposed to be this consistent company that pays you out all this dividend money, and they make all these profits and their cash flow is extreme and all these things. That's not that company. It's not that company right now, right? As far as first quarter EPS, they're expecting to lose 80 cents. 80 cents? This is a disaster, folks. And so when you have something like this, and you have, AMD supposed to report 14% revenue growth for this past quarter, only 6% down for this upcoming quarter, you have to start worrying a little bit and like, oh boy, analysts might be much too bullish on AMD. Maybe it's actually much worse out there for all these different companies, AMD, NVIDIA, Intel, and maybe we got another leg lower to go for all these stocks, to be quite honest. And so that's the way a lot of folks are starting to look at this, and they're starting to worry in quite a considerable way, right? And if you think about this overall week, I mean, there's landmines everywhere this week. You have UPS. UPS could single-handedly send the entire market down. Let's say they have some bad stuff to say. That can send the entire market down, right? You got Caterpillar reporting there. Obviously, you got AMD after the bell Tuesday. You got Meta after the bell Wednesday. We're going to know how the advertising market is doing based upon Meta's numbers. Then, obviously, Thursday's the huge day, right? When you got all these guys reporting, but specifically, everybody's eyes are going to be on Amazon, Apple, Google, all within a 15-minute span. All these companies are reporting earnings within 15 minutes. That's $4 trillion plus right there. $4 trillion plus. I mean, if you add up all the different companies that are reporting Thursday, I mean, that's like a $5 trillion plus day. $5 trillion plus in market caps reporting that day, right? And so there's landmines all over this market right now. And Wall Street's starting, I think, wake up to this a little before here and say, oh gosh, let's just maybe chill a little bit going into what the Fed's about to decide, because the Fed meeting we know is on Tuesday, Wednesday, right? And then you got all these earnings on top of this. Market might be saying, okay, maybe we're running too fast. And so my perspective on this, like, what am I up to over this next 48 to 72 hours? I'm kind of chilling right now, okay? And what I'm waiting for is something's going to break here, okay? I don't know what it is. Maybe it's all these stocks. Maybe all these stocks send down big. Maybe it's Meta. Maybe it's AMD. Maybe Amazon gets dumped hard. Maybe it's Google. Maybe it's Apple. I don't know, okay? Something's going to get hit hard here. And so I'm just kind of waiting with cash over this next 48 to 72 hours and saying, where's my opportunity? Because there's going to be something that opens up here. Maybe it's a full market. I don't know, okay? But something's going to open up as an opportunity. So I'm just kind of chilling back here. I was somebody that was buying like insane as stocks dropped off a cliff throughout 2022, right? Now's a moment where I can just chill a bit and say, let it come to me. Because there's a lot of stocks reporting this week that I love for the long term, and something's going to break here. And it might be all of them. It might be all of them. I don't know, okay? If I knew exactly what stock was going to go down over this next 2 to 3 days, believe me, I would be on a yacht in Monaco right now, not in snowy Las Vegas right now, which suddenly it wants to snow here, okay? And so that's my perspective on this. I'm chilling for this next 48, 72 hours. Something's going to break, and I'll take advantage of that opportunity as a long-term investor. And if it's AMD goes down big, I'll be picking up AMD shares. If it's Meta goes down big, I'll be picking up Meta shares. If it's Amazon, I'll be picking up Amazon shares. I'm going to look for where that opportunity is in this market, and maybe it's the whole market gets dumped. I don't know. We'll see kind of what happens here. But we do know the market's all expecting 25 basis points. So I'm not expecting some skyrocketing stock market if they do 25 basis points, since most people already understand that's what they're likely going to do. And Jerome Powell is going to likely calm the market down and say, chill, guys, okay, chill. Hope you guys enjoyed today's video. As always, I appreciate every single person for watching today's video, and have a great day.